Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Thursday, December 11, 2014. Today folks, what we had a market rally, an attempt to start a rally, but that actually faded. And if we take a look at the situation here in the S&P 500, what we did today is that yesterday we actually started a clear bearish cycle because we broke out of that side of formation. Today we got back in and finally we got back down. So this rally today was actually short-lived. Two sectors actually propelled the rally higher: consumer staple sector and the consumer discretionary sector. But because the rally faded though, on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below, what we have recommended is to actually do not open long positions on today's rally, simply because the fact that markets have not been able to maintain the upward momentum, it's a signal though that this rally is not credible enough. So if we take a look at the sectors that have led the increase, such as the consumer discretionary sector and the consumer staples sector, those sectors are still strong, they rose. However, they're still within a clear sideways formation, meaning they are not able to actually break their top of December 1st on the consumer staples sector, neither the top of December 1st on the consumer discretionary sector. So it's still totally neutral, it's just a rebound within the sideways formation. But today, folks, I'm going to focus on showing you stocks that could break out on different subsectors of the consumer staple and consumer discretionary sector if ever today's rebound is resuming and actually those sectors such as the consumer staple and the consumer discretionary sector in the US starts a bullish cycle. So let's take a look at the signals that you should put on your watch list. First of all, in the apparel retailers, we're totally neutral, but there's one stock I think that should turn out to be a breakout, a buying signal. It's a stock like Children's Place Retail, higher than 55 bucks. It will be a nice entry point because the stock will actually get out of that sideways formation and break that resistance, which also corresponds to the top of February and also the top of August of 2014. And the personal product sector, still neutral. If the rally continues, we could start a bullish cycle if we break the 503 resistance, and Colgate-Palmolive could be the stock that could break out higher than 70 bucks. And the non-durable household product, what stock should you watch? There's Procter & Gamble, higher than $91 is going to be a go for Procter & Gamble because it will clearly break that sideways formation and keep its upward trend. However, your exit point should be at 89.60 if ever Procter & Gamble reverse that upward trend. And the food retail wholesalers, there's Roundy's. Actually, Roundy's is a stock that is breaking out today. I think Roundy's is a nice breakout. As a target for Roundy's, I have a target until 480, which corresponds to that former support of May and January. So it's about 12% potential from this current price on Roundy's. However, the risk is that the support is around 387. So there's a 10% loss potential for a 12% gain potential. And by looking at this with markets that are actually not starting a bullish cycle, with the sectors that are not starting a bullish cycle, I think to have that risk-reward potential, 12% gain at 480, 10% loss potential at around 386, because that's where you have to put your stop loss. I think that you should maybe, if you want to get in on stuff like that, instead of having to tolerate until 387, what you could do is to see, you know what, I might get in and win on Roundy's here and put my exit point, instead of putting it at 387, I'm going to put it, let's say, if ever I see the stock going below 410. So if ever it erases all today's gains, that might be a point where I might slightly reduce my exposure on a stock like Roundy's. So this is the only breakout that we have on the markets, on the consumer, on the food retail wholesalers. However, as I said, the risk reward is not as interesting. And as I said, even if we had a clear upward momentum in rally on the consumer discretionary and the consumer staple sector, so far there are no credible nice breakout to buy. So what I would recommend is to put mostly stocks on your watch list. In the apparel sector, it's Children's Place Retail. In the personal product sector, it's Colgate-Palmolive. And then the non-durable household product, it's Procter & Gamble. And in the food retailers, there's Roundy's. But as I said, in terms of risk reward, it's not as interesting. So I would either open a half of a position, put my stop loss higher, instead of putting it at 387, where you'll have a loss potential of almost 10%. So this was Christian Charlo for MarketGurus.tv. You can have MarketGurus.tv for free for 10 days just by clicking at the link below. And I wish you a good trading and see you next week for your market report.